Hi everyone, welcome back to my channel The Investing Iguana, where I share with you tips and tricks on how to grow your wealth and achieve financial freedom. If you're new here, please consider subscribing and hitting the bell icon to get notified whenever I post a new video. And if you're a returning viewer, thank you so much for your support and I hope you enjoy this video. In today's video, I'm going to talk about something that affects all Singaporeans who have a CPF account, which is probably most of you watching this. And that is the CPF interest rates, especially for the special account and the MediSave account. If you don't know what these accounts are, don't worry, I'll explain them briefly in a bit. But first, let me ask you a question. Do you know how much interest you are earning on your CPF savings right now? And do you know that the interest rates for some of your CPF accounts have just increased for the first time since 2008? Yes, you heard me right. The interest rates for your special account and your MediSave account have gone up by 0.2% from 4% to 4.2% per annum for the second quarter of 2023. That means you are earning more money on your CPF savings without doing anything at all. How awesome is that? But before you get too excited, let me explain what this means and why this happened. And more importantly, how you can take advantage of this opportunity to boost your retirement savings and healthcare needs. So let's get started. What are the CPF accounts and interest rates? For those of you who are not familiar with CPF, it stands for Central Provident Fund, which is a mandatory Social Security savings scheme for all Singaporeans and permanent residents who are working and earning an income. Every month, a portion of your salary is deducted and deposited into your CPF account, which is divided into three sub-accounts: the ordinary account, OA, the special account, SA, and the MediSave account, MA. Each of these accounts has a different purpose and a different interest rate. The OA is mainly used for housing, education, and investment purposes. The SA is meant for retirement savings and can be used for some approved investments as well. The MA is for healthcare expenses such as hospitalization bills, insurance premiums, and outpatient treatments. The current base interest rate is 2.5% per annum for the OA and 4% per annum for the SA and MA. These interest rates are reviewed quarterly by the CPF board based on various market benchmarks such as the local bank deposit rates and the Singapore Government Securities yields. However, these are not the only interest rates that you can earn on your CPF savings. To help boost your retirement savings, the government also pays extra interest on the first $60,000 of your combined CPF balances, which is capped at $20,000 for OA. This extra interest is 1% per annum if you are below 55 years old, and 2% per annum on the first $30,000 and 1% per annum on the next $30,000 if you are 55 years old and above. This means that you can earn up to 6% per annum on your retirement savings in your SA or RA retirement account, which is activated when you turn 55 years old. The extra interest earned on your OA savings will go into your SA or RA to enhance your retirement savings. If you are participating in the CPF LIFE scheme, which provides you with a monthly income for life from age 65 onwards, you will still earn the extra interest on your combined CPF balances, including the savings used for CPF LIFE. So as you can see, the CPF interest rates are quite attractive and competitive compared to other savings or investment options in the market. And the best part is, they are guaranteed by the government and risk-free, which means you don't have to worry about losing your money or getting lower returns than expected. Why did the CPF interest rates increase? Now that you understand how the CPF interest rates work, let's talk about why they increased for the SA and MA for the second quarter of 2023. As I mentioned earlier, the interest rates for these accounts are based on the 12-month average yield of 10 years Singapore Government Securities, 10 YSGS, plus 1%, subject to a floor rate of 4% per annum. The 10 YSGS is a type of bond issued by the Singapore government that pays a fixed interest rate every year until it matures after 10 years. The yield of the 10 YSGS is determined by the market demand and supply, as well as other factors such as inflation, economic growth, and global events. Generally speaking, when the economy is doing well and inflation is high, the yield of the 10 YSGS will go up, and vice versa. For the period from February 2022 to January 2023, the 12-month average yield of the 10 YSGS was 3.81%, which is higher than the previous period from November 2021 to October 2022, which was 3.47%. This means that the interest rate for the SA and MA for the second quarter of 2023 will be 3.81% plus 1%, which is 4.81%, rounded down to 4.2%. This is the first time since 2008 that the interest rate for these accounts has increased above the floor rate of 4%. The last time this happened was in the third quarter of 2008, when the interest rate was 4.25%. Since then, the interest rate has been at or below 4% due to the low yield environment caused by the global financial crisis and the COVID-19 pandemic. How can you benefit from this increase? So what does this increase mean for you and your CPF savings? Well, it means that you will earn more money on your SA and MA balances without doing anything at all. For example, if you have $50,000 in your SA and $30,000 in your MA, you will earn an extra $100 in interest for this quarter compared to the previous quarter. That may not sound like a lot, but over time, it can add up to a significant amount due to the power of compounding. However, if you want to maximize your benefits from this increase, there are some things that you can do to optimize your CPF savings and earn even more interest. Here are some suggestions that you may want to consider. A. Top up your SA or MA with cash or OA savings. If you have excess cash or OA savings that you don't need for other purposes, you may want to top up your SA or MA with them to earn higher interest. You can do this through various schemes such as the Retirement Sum Topping Up Scheme, RSTU, the Voluntary Contributions, VC, or the MediSave Top-Up Scheme, MTS. By doing so, you can also enjoy tax relief of up to $14,000 per year, subject to certain conditions and limits. However, do note that once you top up your SA or MA, you cannot withdraw the money until you reach the withdrawal age of 55 or 65, depending on your cohort. So make sure you have enough cash or OA savings for your other needs before you do this. B. Transfer your OA savings to your SA. If you are below 55 years old and have not reached the full retirement sum, FRS, in your SA, which is $186,000 for 2023, you can transfer your OA savings to your SA to earn higher interest. This can help you grow your retirement savings faster and reach the FRS sooner. However, do note that once you transfer your OA savings to your SA, you cannot reverse the transfer or use the money for housing, education, or investment purposes. So make sure you have enough OA savings for these needs before you do this. C. Invest your OA or SA savings. If you are willing to take some risk and have some investment knowledge and experience, you can invest your OA or SA savings in various approved products such as stocks, bonds, unit trusts, ETFs, and REITs. This can potentially give you higher returns than the CPF interest rates, depending on the performance of the market and your investment choices. However, do note that investing involves risk and fees, and you may lose some or all of your money if the market goes down or if you make poor investment decisions. So make sure you understand the risks and fees involved before you do this. These are some of the ways that you can benefit from the increase in CPF interest rates for the SA and MA. Of course, these are not the only options available, and you should do your own research and analysis before making any financial decisions. You should also consider your own financial goals, risk appetite, and cash flow needs before taking any action. To sum up, the CPF interest rates for the SA and MA have increased by 0.2% from 4% to 4.2% per annum for the second quarter of 2023. This is the first time since 2008 that this has happened, and it is due to the higher yield of the 10 YSGS, which is used as a benchmark for these accounts. This means that you will earn more money on your CPF savings without doing anything at all. However, if you want to maximize your benefits from this increase, there are some things that you can do to optimize your CPF savings and earn even more interest. I hope this video has been helpful and informative for you. If it has, please give it a thumbs up and share it with your friends and family who may benefit from it as well. And if you have any questions or comments about this topic or anything related to investing and personal finance, please leave them in the comment section below and I'll try my best to answer them. Thank you so much for watching this video, and I'll see you in the next one. This is the Investing Iguana signing off. Stay safe and stay savvy.